Robin. Item number 12, the Comprehensive Annual Financial Report, affectionately known as the CAFR.
Good evening, Mayor and members of the City Council. I'm just getting started.
All right.
In October, I provided City Council with a detailed financial report with regard to our results of financial operations from fiscal year 17-18. That report was based upon pre-audit data. I'm pleased to say that the only change made to the city's general fund, the chief operating fund for the city, was a minor adjustment of less than $100. The city has an independent audit conducted on an annual basis. The resulting CAFR, Comprehensive Annual Financial Report, and related single audit report are then submitted to the City Council for review and acceptance. This year is the second year that the firm of Badawi and Associates has conducted the city's independent annual audit. The city goes out to bid periodically for audit services to ensure that we receive competitively priced services and to periodically change auditors in order to obtain a different fresh perspective and an evaluation of the city's financial activities and internal controls. The CAFR presented to you this evening contains an unqualified opinion, meaning that our financial statements are fairly presented. This is the best or highest opinion that a city can receive. As it relates to the single audit report, there are no areas identified where improvement was recommended. There were 3 prior year recommendations, so the auditors provide a status update on those. And their comments and findings as it relates to those 3 prior year recommendations is that the city appropriately implemented all the recommendations and took corrective action. What this means from city staff's perspective, we have a very clean audit and our internal controls are functioning as anticipated and expected. With that, I would like to bring up Ahmed Badawi. He's a partner with Badawi and Associates. He has a presentation to review with you all and give you some of the highlights of our city CAFR and answer questions. Either he or I could answer any questions you might have. Thank you. Ahmed, please come on up.
Thank you. Well, good evening, Mr. Mayor, members of the council, and member of the audience. I am Ahmed Badawi. I was the audit partner on the audit for the city of Yuba City, and I will be presenting to you the results today. So I'm going to start first by letting you know what I'm going to cover today. I'll let you know who the engagement team was, what were our deliverables and the scope of our audit, areas we emphasized on during our audit process, the type of opinion we issued, and summarize for you some of the numbers in your financial statements. I will provide you some of the required communication as your independent auditors, and give you a brief update of the new accounting standards and see if you have any questions for me. So the engagement team, that was the composition of our engagement team. I was the engagement partner. We always have a quality control reviewer. That individual is in the background, so no interaction directly with the city. Her role is to review my work and making sure that we adhere to professional standards. We had a manager assigned on the engagement, Mitesh Desai. Mitesh is actually a partner of our firm, but he's been acting in a manager capacity on the City of Yuba City's audit. We have an IT specialist that we use to evaluate the city's computer system, and we had 2 professional staff also assigned to the audit. In terms of the deliverables, we were mainly engaged to provide an opinion on the city's basic financial statements. That is the CAFR, the Comprehensive Annual Financial Report. Because the city is subject to what we call government auditing standards, we are also required to issue an opinion on our consideration of internal control over financial reporting and on compliance, which we did as well. The city is a recipient of federal funds, which requires a compliance audit, what we refer to as a single audit. So we have performed that and issued an opinion on compliance with those federal awards. We perform an agreed upon procedures on the appropriation limit, the GAN limit, which sets limitations on how much the city can budget out of tax revenue every year. And then finally, the communication with the governing body, which is what I'm doing today, and we normally also issue a letter summarizing this communication and its addressed to the council. In terms of areas of primary audit emphasis, I do want to highlight first that those are not necessarily unique to Yuba City. They tend to be areas of higher risk in almost every audit that we do, and Yuba City is no exception. The first area is revenues and receivables. In any audit, we always make the assumption that people tend to like to have more revenues and less expenditures. So the motivation is always there to overstate the revenues, understate the expenditures. In the government operation, we find getting comfortable with revenues is actually not a very complicated thing. We send communications or confirmations to outside parties. We confirm with the county all the revenues that were submitted to the city, and we reconcile them to the city's records. We confirm with the state all the sales tax, and we send a variety of confirmations to many other parties, in addition to testing of license permits and fees and many other procedures. On the proprietary activities, we do a lot of analytics. We look at consumption, we look at rates, we try to extrapolate the revenues, we do ratio analysis, and investigate any unusual or unexpected fluctuation. The second area of focus was the pension and OPEB. OPEB is the retiree medical benefits. Those areas involve a lot of complex accounting. Also, the dollar amount is very significant. And it relies on the use of actuaries and a variety of other things. So we communicate with the auditors of the CalPERS plan. We obtain audit opinion from them on how much money the city have invested with CalPERS, and also we do testing of the census data, which is the raw data that the city submit to CalPERS on a regular basis, and they use to develop those actuarial studies. And we do testing of contributions and a variety of other things. And then finally, management overriding controls. This is, again, a risk that always exists. Management are the one responsible for developing and implementing those controls, and they can choose to override them at any time. Of course, they're not allowed to, and nothing came to our attention that indicate that this has occurred, but we develop audit procedures to try to mitigate that risk and bring it to an acceptable risk level, basically. So we try to incorporate an element of unpredictability in our audit procedures. We test journal entries prepared by management. We review management estimates, making sure that they are free of bias, and a variety of other things that we will perform as well. Like Robin mentioned, we have issued an unmodified opinion. Unmodified opinion means it's a standard opinion. Unfortunately, in our industry, we cannot issue what we call great opinions and say, oh, the city did fantastic. So it's either you get the standard opinion, or we start modifying it to address issues and problems. So the city has received the unmodified opinion. The opinion stated that the audit was performed in accordance with generally accepted auditing standards and government auditing standards. And an unmodified opinion means that the financial statements are fairly stated in all material respects, that all accounting principles have been consistently applied, that all estimates are reasonable, and that all disclosures are properly reflected in the financial statements. Wanted to summarize for you some of the numbers in your financial statements. Please keep in mind that this is a 30,000-foot view. We're not really drilling into your individual funds. But if we look at the city in total, this is the composition of the city's assets over the last 3 years. And like almost every single city we audit, the two largest assets are cash and investments and capital assets. That is expected. Cities maintain a certain cash balance to ensure continuity of operation and being able to respond in emergencies. And of course, you're always doing street work and infrastructure and other things. So those are expected to be the two largest assets, and that's the case with Yuba City. The next slide is focusing more on the liabilities. And you will see here that the two largest liabilities are your pension liabilities and your what we call the long-term debt, which normally are your bonds and long-term loans and capital leases, those types of standard debt. Also, the city this year has implemented new standards for the retiree medical benefits, which what we call the net OPEB liability. So that $3 million is the unfunded portion of the retiree medical benefits. I would say that the only one that deserves mentioning, but we're going to have a few slides about, is net pension liability. That's the one that had the biggest increase. And I'll provide more detail in the next coming slides. This slide just takes the city's assets minus liabilities. That's your equity. And we divide the equity into multiple categories. The purpose is to let the reader know whether those are spendable or not spendable, restricted or not restricted. So the first category, the net investment in capital asset, that is not really in a spendable form and most likely would never be in a spendable form. This is the money that the city invested in your streets and roads and infrastructure. Then you have all these restricted amounts, and they are either restricted by grant agreements, by bond agreements, by the state if you're receiving gas tax and those types of revenues. And then finally, the unrestricted is the amount that is under the council control. That amount have no outside legal restriction. I'm sure that you have already designated it for other purposes, but we're just highlighting that you can change that if you choose to do so. The next slide is really taking the city's revenues minus expenses. Keep in mind this is on a full accrual basis, so it's a different type of accounting than what the general fund would use. So I would just, we always get a little hesitant with including that slide because we don't want you to read too much into it. It does fluctuate sometimes. For example, that big increase from last year to the current year is a result of the city receiving a large amount of grants in the street fund that had made that number look that much higher than last year. That doesn't mean that the city would be receiving those types of grants every year at that level. This slide is focusing on what we call the net cost of service to tax revenue. So the net cost of service is taking all city departments, how much it costs to run these departments, and we subtract from that any revenues that those departments are able to generate on their own. So that can be either fines, fees, charges for services, or grants that they received to be used on their program. And the idea is to see how dependent are these departments on tax revenues. Of course, every department is dependent on tax revenue. The purpose of this slide is to show you whether your tax revenues are sufficient to cover the net cost of service or not. So this year, again, a big change compared to the prior years. Prior years, your cost of service always been higher than the net cost, than the tax revenues, and that usually is due to spending down fund balance that you accumulated in the past, maybe on projects. But this year is different, again, because of those grant revenues that went and reduced the net cost of service significantly. So that's the reason for 2018. If we were to just focus on your general fund, obviously the general fund is the measurement of the city's liquidity. This is where most of your unrestricted resources reside. So what we do is we take your unrestricted fund balance and we compare that to your annual expenditures. The idea is to see in the very, very unlikely scenario that all your revenue sources stop coming in, how long can you continue to pay your bills? And we have determined that you probably can continue to pay your bills about 2 months. The minimum recommended ratio by the Government Finance Officers Association is 2 to 4 months. So you're definitely hovering around that lower end of the range, and it's something that we keep an eye on. But in the meantime, the city also have funds in the internal service funds, and those are also unrestricted resources and can eventually be used. So we're not totally alarmed, I guess, what I'm trying to say about that. If we want to focus on pension, so this is a summary of the city's contribution to CalPERS over the last 3 years. So you can see the trajectory is that it is going up every year, and the expectation is that it will continue to go up. If we look at the funded status of the plans, so that's the funded status of the city's safety plan, police and fire, and as of the most recent measurement date or valuation date, which is the bottom line, you will see that the city had about $102 million invested with CalPERS, had about almost $140 million liability, and that left the city with about $37 million unfunded liability. Same scenario for the miscellaneous plan. You will see that the unfunded liability for the miscellaneous plan is close to $39 million, $38.5 million. One very important thing that I want to highlight is that these numbers are really just a big estimate. And the estimate is developed by CalPERS actuaries based on a set of assumptions that some of them can be significant and some are not very significant. So the most significant assumption is what we call the discount rate. So currently, or the numbers that we reported in the financial statements are prepared using a 7.65 discount rate. So the idea of this slide is to show you where your numbers would be if the discount rate goes up by 1% or down by 1%. So if it goes up by 1% to 8.65, your total liability for both plans will actually go down by about $30 million. If it goes down and we use a 6.65 rate of return or discount rate, your liability goes up from 75 million to 113 million. So it's a big change, and obviously that's the reason why we're highlighting how significant this assumption is. We know that CalPERS is reducing the discount rate. They haven't gotten to 6.65 yet, but definitely they're on their way. So I know for the most recent one, it's now at 7%. So that's going to automatically increase the city's liability. And then if they decrease the discount rate more, then we will see more increases. Another benefit that the city offer are the retiree medical benefits. So this is the contribution to the plan over the last 3 years. And the contributions can be in the form of benefit payments or contribution to the trust. The funded status of the plan. So this is really a very small plan compared to a city like Yuba City. So I guess it's a good thing for the city that you don't have such a big liability. And the city has started to put money away in a trust, and that's why you see that 242,000. So the city's taking action to try to address that liability as well. This liability is also an estimate, and it's dependent on some assumptions. So again, the discount rate is a significant assumption in estimating that liability. So the idea is to show you what your liability would look like if the discount rate goes up by 1% or down by 1%. Another important assumption in the retiree medical benefits are what we call the healthcare trends, or how more expensive health premiums are going to be in the future. So again, the idea is to show you how much your liability would be if those assumptions go up by 1% or down by 1%. This next part are the required communications as your independent auditors. So, excuse me if I end up reading the slides, but there's just it's language that we have to communicate to you. So on the left side of this slide, you will see our responsibility as your independent auditors. We're mainly responsible for issuing an opinion on the basic financial statements. We're responsible for evaluating internal control, including the tone at the top and making sure that management is sending the right message to the rest of the organization about importance of controls, consequences of committing fraud, and so on. We're responsible for evaluating compliance with laws and regulations, for making sure your financial statements are clear and transparent. So not just complying with the accounting standards, but also if we feel that maybe you did comply with the accounting standard, but it's still not very clear and we think it may be confusing to the reader, we will definitely ask the city to add more clarification there. And then finally, we are responsible for communicating with the governing body, which is what I'm doing today. Management have a lot of responsibilities in this audit process. So the fact that you hired our firm to certify the number does not relieve management or the city council from its responsibility towards the completeness and accuracy of those financials. Our audit only provides reasonable assurance because we do on a test basis. We have materiality level. We don't look at every $5,000 or $10,000 that the city is spending. The city is also responsible for establishing and maintaining internal controls, for making financial records available to us during the audit process, for establishing controls to prevent and detect fraud, inform us of all known and suspected fraud, comply with laws and regulations, and take corrective action on any audit findings. In terms of independence, we have to maintain our independence from the city. This is solely our responsibility. We look at independence in a variety of ways. So, for example, we look at our staff and we circulate questionnaires asking them to identify any direct or indirect relations with the city or city staff. We immediately remove those individuals from the audit. We evaluate any additional services that we offer the city and make sure that it does not impair our independence. So, for example, we assist the city in compiling the financial statements. So we have to put procedures in place to make sure that we're not the one developing the numbers, that we're taking the city's numbers and just putting them into that format. Also, we look at independence from appearance. We want to make sure that we retain the public trust. So we don't want to look that our relationship with city management is just very close that can raise these questions. So we try to avoid situations like that. In terms of timing of the audit, we believe that the audit was performed timely in accordance with our engagement letter. In terms of significant accounting policies, so those were the new accounting standards that were due to be implemented this year. So we have discussed with the city and determined which ones are applicable, which ones are not, and made sure that the city have done the proper implementation. Like I mentioned earlier, some of the numbers are estimated numbers and not actual numbers. So this is a listing of some of those numbers in your financial statements that are based on estimates. I'm not going to read this for you, but these are some of the important disclosures in the financial statements that I believe it enhanced the reader's understanding of some of the numbers. We're pleased to say that we encountered no difficulties during the audit. It's actually very pleasant working with the city. City staff were very responsive. We really didn't have any difficulties. There were some adjustments, like Robin mentioned, very minor, and management has posted those adjustments. There were no significant risk or exposure that were identified to us other than the standard legal matters. We're pleased to report that we had no disagreement with management. We had no material weaknesses in internal controls. We obtained certain representation from management dated December 5th. Those representations normally say management telling us that they have taken responsibility for the financials, that they have no plan on selling city assets, and they recorded all transactions and so forth. We're not aware that management has engaged any other accounting firm to consult on audit matters. Other than our engagement letter and the representation letter, we had no additional communication with management. There were no material uncertainties relating to events and conditions, and we have not become aware of any fraud or illegal act. This is a listing of the new accounting standards that will be coming your way. Every year we discuss with management and make sure that they are aware of what's going to take to implement those standards. Then finally, more than happy to answer any questions you have. I do want to thank you for the opportunity to provide audit service for the city.
Thank you very much. Any questions? No, from me? Would anybody from the public like to speak on the item? If so, please come to the podium and state your name and address for the record. None. All right. Thank you very much. Really appreciate it.
Thank you. Have a good day.
Thank you.
It's back to council for action.
Through the mayor?
Yes.
Mr. Mayor, you're going to do a motion, correct? Vice Mayor. Mr. Mayor, I'd like to make some comments before we go to action. First of all, good job to our team. As I was sharing with Robin earlier, I know the full effect because of my profession in getting the, as I call it, the no management letter, meaning everything is good. Means we're doing things in accordance with the GAAP internally. So good job, Robin, to you and your team. What I take away from this, Mr. Mayor, and we're getting ready to go into the season to where we prepare our next budget coming up in early spring, is we're not in bad shape, but we need to be a little healthier. And I'd like to see those reserves be moved from 1.1. We need to really set a goal to try to get our reserves up to that 3 mark, 3 months. That's advice I would give any company that I'm working with, to be stronger in that. And then I'd also like to, in future meetings, for us to start thinking a little bit outside of the box with what we can do with PERS, because you can see how volatile it is, sir, with the interest rate fluctuating by 1%. And the way things are going right now in our markets and with the everything that's overall, we need to bank on that rate moving more down towards that 6.65. So I'd just like for us to think outside of the box going forward.
And that would be a continued thinking process. We've been trying to do that a lot, and we're always opening suggestions you maybe bring forward. All right. Any other comments? All right, looking for any action? on this
Okay,
item?
through the mayor.
Sure.
I'd like to accept the annual financial report and related adult reports for the fiscal year ending of June 30th, 2018.
I second.
All right, motion is second to approve. the CAFR report. All those in favor? Aye, please.
Aye.
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 Opposed? All right, very good. Thank you very much again.